I'm Mike Larson, editor-in-chief at MoneyShow and host of the MoneyShow MoneyMasters Podcast. Given all that's been going on in the precious metals market, with gold hitting all-time highs, silver rallying to 11-year highs, and strength in the mining sector, I had to sit down with two top MoneyShow experts to see what they had to say about what's driving the action and where things are going to be going next. Today, I'm speaking with Brien Lundin, executive editor of Gold Newsletter. Brien, how are you?
Doing great, Mike. Great to talk to you after it's been a while.
It sure has been a while. Glad we could catch up. Obviously, this is a crazily exciting time in the precious metals market with what's going on with gold and silver. So I just wanted to start from like 30,000 feet up and have you tell me, in your opinion, what are the one, two, or three biggest drivers of this, and kind of how do you see them playing out as the year goes on?
Yeah, this has been a really weird gold bull market. A lot of things that we've never seen before have happened. And it's been hard to figure out. And there have been, I think, 3 or 4 factors moving the market so far that are easily identifiable, and maybe a fourth that's kind of still mysterious. But for the first 4 to 6 weeks of this bull run, it was just a relentless rise. Gold was setting new records every day, hardly one day without a gain. And it was really awesome and surprising and came out of nowhere. And it took us about a month or so to try and figure out what was really driving the buying. And it was coming from a number of factors. Central banks, and they had actually been buying all along since March of 2022, when the U.S. imposed sanctions on Russia. And a lot of other nations started trying to, de-dollarize and move toward the gold to try and gain some independence. And then we had, in the early part of the year, tremendous buying by the People's Bank of China, again, central bank related, but very aggressively from the Central Bank of China. And we also had Chinese citizens buying gold, hand over fist. And they don't usually buy on a price rise. They usually and have always historically bought on price declines and have served, therefore, to kind of support the price on declines. But this time they were chasing the price higher, kind of like Western speculators, Western investors typically do. And in this instance, also, the Western investors weren't buying on the run up for some reason. And I think it was because that this move came out of left field, and the Western investors were waiting for an opening and didn't really understand why the price was moving. And that gets to that other factor that I think is coming up, and that's a Fed pivot. That's the thing we expected to drive gold in the first half of this year, and it never happened, just kept getting postponed. That, I think, is going to start to come into view in a couple of months, and investors are going to start placing that bets on that driver. And that's really the big driver that I think is going to take gold to even far higher levels.
Got it. Let's try and unpack a couple of these things a little bit more. I mean, you used the de-dollarization term. I know at least 1 or 2 other people I've spoken with did as well. What does that actually mean, and how does that fuel what happens with gold?
Well, it means, I guess, different things to different people. Some people think it means the end of the dollar as the world's reserve currency. I don't think that's going to happen at any time frame that really makes sense for us to worry about. In other words, not in our lifetimes, because we still have the best rule of law out of all the other options out there here in the U.S. But what's happening right now is that the dollar has been weaponized, and this has been a trend over years. But with the sanctions on Russia, it's really reached a new height where the dollar is used as a weapon. And countries just want to maintain their independence and insulate them somehow from being able to be victimized by the U.S. government for whatever reason. So it's just a trend to diversify assets, reserve assets, out of the dollar and toward gold. And if you look at the trend over time, you can see that the dollar as a percentage of international reserve assets is decreasing, while that of gold is increasing. The lines are not about to cross anytime soon, but I think they will eventually.
Okay, fair enough. One thing I have to ask you about, and that's sort of the way investors are behaving differently in different parts of the world. I mean, I think I've kind of been surprised, frankly, at the lack of piling into things like GLD and some of the other, junior miners and so on in the U.S., given what, how powerful this move has been. What do you think is behind that versus, say, what you alluded to happening over in China?
Yeah, and the factors behind gold's rise have been, weird and different, somewhat mysterious, and we've seen a lot of head fakes from gold in recent years. So investors don't want to jump in and have this turn out to be a false move. Also, initially there wasn't a break, there was no entry point. We didn't have any pullbacks for people to get in on. But I think it's coming. I think for two reasons: the Fed pivot. The Fed shift from a rate hiking to a rate cutting side of the cycle is something that Western investors can see and project forward. They can understand that this is a trend that's going to be around for a couple of years. So we feel safe in betting on it. It's not going to turn around anytime soon. The other thing, again, is that there wasn't any break in the rise, no entry point. And where there have been, we've seen some early signs of investment by Western investors. For example, on April 22nd, gold dropped about $60. And then the next day, the price kind of stabilized. And it was either that day or the day after, we saw a 10% gain in Newmont mining on the back of no corresponding movement in the gold price. Now, Newmont is the only gold stock that's actually in the S&P 500, so it is naturally the initial target of the generalists trying to come into the sector. So that was a sign that here we had an opening, an entry point, and the generalists kind of seized on it. I think we're going to see that again if we see a Fed pivot. The key thing to consider is that when the Fed was hiking rates, and when it was hiking rates in the most severe rate hike campaign that arguably that we've ever seen in the history of the Fed, over the course of that period, the gold price gained about $700 from trough to peak, or about 40%. So if gold can do that during a very severe, historically severe rate hiking cycle, well, what's it going to do when the Fed finally capitulates and pivots to the rate cutting cycle? I think the argument there is very powerful that it's going to do much better. And that's going to bring a lot of generalist investors into a relatively tiny sector.
Got it. You want to throw your hat in the ring at all on kind of what you're looking for the Fed to do and when? I mean, when it comes to cutting, when do you think they start and how much do you think they do?
Yeah, the current odds are favoring between 1 and 2 by the end of the year, and I think that seems fair to me. The thing that's most important to me is not so much the timing, it's the very fact that they have to. The over 4.5 decades of ever easier money since Volcker just started lowering rates in the early 1980s. We've accumulated debts that were ever greater, and to the point where today they're completely incompatible with interest rates at these levels. Now, interest rates at these levels are historically normal or even low, but not compared to the debt loads we have today.
Yeah.
We can't have interest rates where they are today. We can't survive with the kind of payments that are present and coming down the road for the federal debt, for commercial debt, on and on. So that's a tsunami that's kind of lying off the coast of the economy, and it's going to hit in successive waves over the coming months as more and more debt gets reset. So I don't think the Fed can hold out much longer. I don't think more than the end of this year. And if the longer they wait, the more urgently they're going to have to cut because something is going to break.
Got it. Anything you'd want to add about silver here, since we're talking precious metals in general as well?
Yeah, this is a monetarily based secular bull market that we've begun for gold, because we are in, the end game of this long-term, ever easier money cycle. And in any kind of a bull market like this, that's long-term, that's based on monetary issues, based on concerns over the depreciating purchasing power of the currency. In those bull markets in gold, silver has always outperformed gold. So my expectation is that silver is going to do the same thing again and outperform gold. It's kind of like a non-expiring option on the gold price. And so I'm very bullish on silver right now.
Okay. Okay. When it comes to playing this trend, if things do sort of play out as you expect, I mean, is somebody best looking at coins, bullion, stocks, ETFs? Where do you think somebody should approach this market when it comes to exactly how to profit?
Well, if they're new to the sector, if they don't have any precious metals investments at all, they should focus on physical metals, that is either in their possession or readily accessible. Gold and silver are insurance against something you know is going to happen, that being the depreciation of your purchasing power. So if you know it's going to happen, you can lock in that current level right now by holding gold and silver, because over the broad sweep of time, gold and silver protect against depreciation of your currency's purchasing power. So get physicals first. If you think that the macro environment argues one of these catch-up periods where the gold price really responds to the worries over the currencies, then you want to invest. One hand you insure, and the other side you invest. And to do that, you'll want to find ways to leverage those moves in the metals. Now, the ways to do that are myriad. You can do futures and options if you're a good trader and know the risk and can tolerate them. You can buy the indices and mining indices. You can buy those indices of leverage. You can invest directly in mining stocks. And in that sector, there's a wide spectrum from the big producers down to the juniors and explorers. So you can explore all of those options. I would say that in the mining sector, especially in the junior sector, it's very risky, but the rewards can be commensurate with that risk. It's also very inefficient. So you can find values that the market has temporarily overlooked just by doing your research and learning about the sector. And it's a lot of fun. It's kind of like the romance of prospecting and a treasure hunt. It's a fun sector to speculate in, but they are speculations.
Yeah, sure, absolutely. I guess last question I'd ask, going certain levels, targets, duration, anything you'd want to say about kind of where you expect gold to go and silver to go, and how long you think it'll take to get there?
Yeah, precious metals or gold and silver, one of those areas where the short term is unknowable, but you can be fairly certain about the long term. And if my thesis is correct that we're in the end game of this long multi-decadal cycle of ever easier money, ever greater depreciation of the currency, and that the water is kind of circling around the drain a little more quickly now, then I think you have to look at this as really the fourth secular bull market in gold. We had one in the early 70s, one in the later 70s, and one in the early 2000s. And in each of those three instances, gold went up anywhere from 5.6 to 8.2 times in value from the lows to the highs. Now, I placed the low in this cycle at about $1,040. So that gets you in the range of somewhere between high 5,000s to low 8,000s for the ultimate end of this cycle. Now, when is that cycle going to end? I think it's going to take years.
Yep.
But I would say it's a cycle that you want to participate in and ride to the end of it. And we don't know how long it's going to take, but you're going to want to own going into this kind of end game of that long-term trend.
Got it. Well, Brien, really do appreciate your perspective here, taking some time out to chat, and I'm sure we'll be speaking again in the future, maybe as soon as Orlando in October. So, Brien, thanks again for your time.
Looking forward to it, Mike. Take care.
Today, I'm having the chance to speak with Omar Ayales, editor of Gold Charts R Us. Omar, how are you?
Hi, Mike. Doing well. Thank you for the interview.
No, absolutely. I mean, this is a kind of market where it's just getting more interesting, more opportunistic in the precious metal space. So, given your background, I want to kind of start from 30,000 feet up. And what is it that you're seeing that's driving the action in gold, driving the action in silver here, in early 2024 and really beyond?
For me, really, it's an inflation story. And there's a lot of interesting tidbits, but it's basically an inflation story that has been fueling the metals ever since there was this big shift towards higher inflation for longer. that we saw formalized back in 2022, post, of course, brought by probably the pandemic and a lot of what everybody knows regarding stimulus and easy money and years of easy money. But that back in 2022, we saw a clear breakout. And it's one of those breakouts. It's a longer term breakout that is not just a little blip. It's not just something that's transitory. It's actually something that is a mega trend. And I believe, and since then, and I still do, that that is the driving force for the rise in metals, gold, silver specifically, and others.
So, yeah, I remember, I remember seeing that chart in a previous conversation we had, just kind of, that this is a 4-decade trend that's been broken essentially.
Exactly. It started back in when interest rates peaked in 1981, approximately, and inflation basically peaked back then too. And for the 40 years that followed, we had been living an era of, disinflationary forces or outright deflation in certain areas, more recent. And that reached, a low. And that was around 2020 with the whole pandemic when rates were like once again slashed to zero and the story. But that was kind of like maybe like the pinnacle of low interest rates. And ever since, there's been a turnaround and a breakout. Of course, I'm a chart man, so like when I see the breakout in charts, it tells me things. And I've seen that turnaround in the past 2-3 years. Not only become but confirmed, and it's opening our eyes to higher inflation and higher rates for longer now. That doesn't necessarily mean that it's in a straight line shooting up, to the stars. Of course, sure. It's a trend that takes 30-40 years to develop as well. And sometimes it's hard just because it's hard to grasp. We haven't been in this type of situation since, the period from 1940 to 1970, or 80.
Yeah. Okay. So what does that mean from a metals perspective? Is it in your mind then this is really a big macro trend that people are looking for inflation protection, or are there other things that are contributing to it as well?
Well, I mean, I think there's a lot of things. I think the inflation story is definitely like a backbone strength of the gold market, and and when I mean the gold market, of course, I include silver, but there's a lot of other things. Well, and there's things, Mike, that are driving this inflationary story, right? That are mega shifts that are happening worldwide. For example, global fragmentation. For example, an energy revolution that we're living. The need for just more capacity. And global fragmentation, going back to that, huge, because all of a sudden the world is realigning itself, having to, or looking, not having to, but more like looking to, sovereigns and countries doing business with friends and with allies, or even with, other sovereigns that have geopolitical interest aligned, that things of that nature that ultimately, when you're buying from friends, it's not necessarily you're buying the cheapest, right? Like it was for the past 40 years from China, but it's actually, paying maybe a little bit of a premium, but you're contemplating other aspects. So I think like, some of these things that I've been mentioning, are contributing to the greater push of this greater inflation story down the road. And I think definitely that is the main reason why. No, of course, Mike, we have geopolitical turmoil, we have wars going on. I personally don't believe that the threat of geopolitical issues, war, etc., are contribute to the longer term development of the metals or gold and silver. I think you could see a spike up and down, and that's when usually you see them, when there's those international skirmishes. Yep. But the backbone strength of gold, I believe is the whole inflationary story for those reasons I cited.
Got it. So who's doing the buying that's driving it here? And I ask because I look at some of the stats from World Gold Council and so on. They're looking at some of the central banks. China, for example, has been pretty aggressive. But then you look at U.S. ETF purchases, things like GLD. There just doesn't seem to be individual investors flocking in. I'm wondering if you had any thoughts on that.
Well, I think it's all related to this global fragmentation story. Basically, central banks across the world, as they see that there are different systems, global systems that are being forged, due to sanctions and different things that have been happening, due to geopolitical turmoil, especially Russia, Ukraine, well, the different ones that you and everybody else will know. You see that central banks have, it's not that they're turning away from the US dollar, but, I think they're looking for diversity. And right now, when you're looking at, well, okay, I want to also be a part of these other systems, what do I do? What do I buy? Well, the currency market really, ex the US dollar, doesn't really look great. So where are you going to put your money? It's not really like an easy choice. And then you're not really, if you go into US treasuries, well, you're kind of doing the same thing going into the US dollar. So I think gold, allows for that diversity. It allows for eventually whatever systems become forged, whether it's a brick system, whether it's something else, whatever is going to be a parallel system that's going to be created to the current system is going to need, like an agent or something to be able to arbitrage value between the different systems. How are we going to be able to determine if the US dollar is worth in a system that is not being used, or likewise the other way around? And I think that gold in this particular circumstance is of great value, because it's actually the natural arbiter of value between any currency systems that are created. And I think that one of the reasons central banks are going into this is because of that. They're just looking for diversity because of this global fragmenting. It's a question of diversity, for absolutely. And again, I think it's gold, because most other currencies are just, you see the euro, which is, a very strong currency, but it's, like it's been in a, long-term downtrend. It doesn't seem to be going to be breaking that anytime soon, and most currencies, most major global currencies, the yen, continues to tank, and things of that nature. You have others, the Swiss franc, which you could, but, and I'm sure central banks are also, some of them populating, their assets with that kind of stuff, but I think at a lesser degree.
Got it. Okay. Well, let's talk about charts. Obviously, as you mentioned yourself, you follow them closely. I mean, when you look at things like targets, upside, duration of this run, I mean, what do you see for things like gold and silver?
Well, so I follow a couple longer term cycles for gold, that I constantly that I will be showing at the Money Show conferences that I attend. I always take them. I think they're great. But basically, there's two major cycles, and just to keep it simple, there's one cycle regarding bottoms, which is every 7 years, and this cycle goes ever since the price of gold was freed back in the late 60s, early 70s, and then there's an 11-year cycle of tops. Okay, one's of bottoms and the one's of tops. And the reason why these are important is because they've been very, very consistent, Mike. They've been very consistent for the past 50, 60 years. And, of course, if past is prologue, then, it's telling us a couple of different things. Right now, for example, the last major lows that we've had was 2015, and more recently 2022. Okay, that's 7 years from 2015 to 22 or 7 years. But the 11-year cycle that's of tops that would start usually at every low, that started in 2015, the last 11-year cycle of tops, okay, that tells me that gold is going to have a major peak around 2026. Okay, of course, that's not exactly, it could be the end of 2025. It could extend a little bit further. The gold market right now is very strong.
Sure.
But around 2026 is where I have my eye, and I think that again, it's not necessarily a straight shot up to there, but I think you're going to be better off holding and owning gold right now from here to then than not, and I think it's going to be one of the assets that outperforms global assets.
Any price targets or anything like that? Is that part of your work? I'm just kind of curious. Based you look at the chart of gold and what it's done. I mean, is there a reasonable expectation for where it goes, and for silver as well?
Totally. Look, I think very reasonable expectation for gold would be 3,000. I could say higher numbers, and it could be. Again, the gold market is very strong, and it wouldn't surprise me if it breaks that. But 2450 was a big number for me that obviously we reached already, and the reason why is because really 2450 and was really the gold's inflation adjusted peak of 1981. Interesting, and it reached that, right? So and an inflation adjusted. So adjusted to inflation, gold actually reached the same peak of 1981, and I think that was a major top. But I think gold will break that, and that's just gonna show a tremendous amount of strength, and we're gonna see gold rise to about 3,000. And I think that's the next major milestone, and probably in 2026 or before. For silver, the same. I think the recent breakout above $30 for silver was huge. Because it had been resisting at that level even when gold was already rising to new highs back in 2020, right? and in similar situations. So I think this breakout, is telling us that silver could very easily reach, the 2011 nominal highs of around $50.
Okay. So someone's watching this or reading your work or listening to one of your presentations. I mean, what do you give them advice for if they want to get involved in the market? I mean, what are some of your favorite vehicles? Is it mining stocks? Is it bullion? Is it ETFs? Just kind of curious about your take there.
Well, I usually like to have like an approach that combines all of those together. So I have, I have a little bit of physical, honestly, I have some physical, I have some ETF, gold, just because I like to be maybe at some points going in and out, and I'm not just going to sell my physical. My physical I keep, but the ETF, I'll trade once in a while. And, like now, of course, the miners, I think are my favorite. When you're talking about senior miners, I believe that you're talking, it's a gold standard. It's like gold, the Anico Eagles of the world, like the Barracks of the world. I think that those companies that are very well established with, like awesome operations globally and, great balance sheets, I think those are like owning gold. They even pay a dividend that is, not all that bad. And, and I think that's a great way if you just want to like not think too much about it. Just buy the senior miners and you'll get, you'll definitely get, a better return than if you just would on the bullion. Now, very interesting, Mike, that one of the things that the charts tell us when I follow is that when I'm looking at relationships between, miners and the gold price and the moment in time that we're in, usually when gold is going to become go into a phase that is strong or is currently strong, usually the junior miners tend to outperform the senior miners. Okay, people maybe, and then look, and going to what you had mentioned earlier about not seeing the Western civilization or culture going into gold as much as maybe Eastern, right? You made a point to that. I think that one of the places that we're going to see that actually develop is probably in the junior miner space. Usually Western American investors, retail investors tend to like really like, the multiples on those rises. They tend to get crazy. And right now, junior miners are really, really cheap. They could get a little bit cheaper. So, I mean, I wouldn't necessarily go in like right this second to like all into it, but I have been buying, I have been acquiring. We made in our letter, we made a big shift, from our position very recently where we went away. Well, we were only investing in senior miners, miners, and then we shifted now, and we still have some seniors, but now we're zeroing in and trying to consolidate and accumulate the junior miners, that I think are going to be a really good place to be over the next, year or 2 years.
Well, Omar, this has been a fabulous and eye-opening conversation. I really appreciate you taking some time out to chat. I know that people are going to enjoy getting a chance to hear what you have to say in Orlando and elsewhere at Money Show events. So thanks again for your time.
Thank you, Mike. It's a pleasure. Anytime.